reality, Rob, we probably are the fastest growing gold group in the industry that no one's ever heard of. But I don't mind that, right? And, that's fine. We're in the game of only buying existing. We only buy existing capacity. We don't build, and that's a different game altogether. Like that's the game for the big guys with the big balance sheets. But I also must say, I think our life's made a lot harder by all the money that gets funneled into exploration, and most of it is literally just burnt with $100 bills with a lighter. So I find that actually very frustrating, that there's a lot of shitty exploration plays that just keep coming back for money, and they're taking widows and orphans' money and burning it. And I'm really against exploration. I'm really vehemently against exploration. I think it's such a massive time waste and destruction of shareholder value. And occasionally you will find the next super pit once every 50 years. But apart from that, most of these things never get built. They never get permitted, and they just lifestyle companies. And I know that's a lot of people don't like to hear that, right? But I think exploration is, I don't explore anything.
So you need to look at capital intensity. You look at it from what it did between 2001 and 2010. Capital intensity grew from $3,000 a ton to $8,000 a ton. And what did the copper price do? Went very similar, from $3,000 to $8,000 over that decade. Now, you look at capital intensity figures, and as of last year, they were around $23,000 to $24,000 a ton. But the copper price is only at $9,000 a ton. So and you look back 100 years, and this logic holds steady and holds true, where your copper price will track capital intensity on a 1-to-1 ratio. So I think where the price needs to go is actually to the $23,000, $24,000 a ton. So what's that, like roughly $10, $11 a pound of copper. And now that might sound like a big call, but you watch what happens over the next 5 to 7 to 10 years and where the copper price actually goes. And I think you will see that it'll do what it's done for the last 100 years, and it'll track capital intensity.
When we started building those machines for indoor confined complex spaces, nobody had ever heard of it, and so we're really pioneers. And by far the market leaders in flying in those environments where no other machine can reliably go. We started the business as a pure robotics play, a pure hardware play, and gradually we started adding more and more sensors on board the machine. It started just with a video camera basically, and today we are flying a broad range of instruments on board this machine, including lidars, thermal cameras, ultrasonic thickness sensors, radiation sensors, gas sensors, etc. So we really went from building one drone to providing a broad range of solutions, and developing a ton of software that goes in combination with this data acquisition towards providing end-to-end solutions to the various types of customers that we have, and providing insights rather than drone.
Right. So the timeline would look like this: that the bulk sample will be collected and ready to go to a process plant by the end of this fall. We expect to have the graphite concentrate from that processing ready by next spring. At that time, the pilot processing plant will be ready, and we will be running some tests that will be taking a couple of years to also feed into the definitive feasibility study, both for the mine and for the process plant. So in about 2 years' time, granted that we have the access to capital that we need, we will be arriving at the final investment decision. Then continues a couple of years of construction at the mine in Greenland and the processing plant in Norway, where we are planning to set up the active anode materials processing plant. So in 4 years from now, we can be in production. That is in end of 2029.
Number one, to prolong equipment lifespan. Because if you prolong lifespan, whether it's in engines of haul trucks, which are like $400,000 per engine, or the tires, or whether it's the motor of the crusher, if you prolong the lifespan, you're able to replace less of them. Obviously, every replacement has a cost, and then when you look at over, let's say, time, or 3 years time, 5 years times, you've done less replacements, meaning less costs of the spare parts, less labor that was required to do that, and so on. So this is another, I would say, the second category where the overall, let's say, headline is reduction of maintenance cost, and itself it has the breakdown of the spare parts, labor, and so on. In both of them, there are also safety benefits. They are harder to quantify. Some clients are looking at how much training went into their safety, safety protocols and so on. But obviously the largest factor there is the reduction of the risk of safety. Because when you look at the statistics, and there's a very McKinsey article about it, when you look at the frequency of safety events in unplanned downtime versus planned one, it's really factors apart. It's 3 to 5 times more. And the reason is that you do something that's unplanned in the middle of the night, you don't necessarily have the equipment, you're in a rush, and obviously that all translates to a higher risk. While if it's planned, even if that equipment is deteriorating, if you know about it a month in advance, you're able to plan it, you do it in daytime, in regular shift, there is no rush and everything is okay, and it really translates to less injuries and sometimes even more severe
We
consequences.
see a very significant potential from the first asset. Today, ACG is under $200 million market cap plus $200 million in bonds. The NPV of the asset is around 700 million. So there is a significant upside on the base case with continuous high cash flow generation. But this is the first asset. The strategy for us is to acquire similar or ideally larger assets as we move forward with a vision of having 200,000 to 300,000 tons of copper production in 2 to 3 years' time. In order to get there, you need to work on a number of transactions. My humble experience tells me that it is 1 out of 5 that works, 1 out of 3 if you're lucky. We have just about 8 to 9 deals that we're working on. So we shall see from us hopefully soon about our next acquisition and the next acquisition. But given where the copper market is going, we are keen to put further operating on near producing assets on our platform before the copper prices run too high too
The Black
fast.
Token is an opportunity to provide ownership of coal, fractionalized ownership of the coal from the individual investor through corporate and large, potentially venture capitalist investments in coal itself that would be produced. Those tokens could be held and then converted into actual coal production and would be the start of our blockchain for coal supply. The other side is the green token. The green token is intended to represent each token is a ton of coal that will remain in situ, in the ground, not produced. That amount would be kept in a ledger, and we would create a trust for those green tokens to reside in that would last for 10, 20, 30 years as a commitment not to produce that coal. And as we further develop the blockchain around the green token, we want to be able to upscale that to carbon credits because of that connection between the amount of carbon and the CO2 that it could produce once it's used. Companies that need carbon credits for their sustainability programs might be able to then to purchase those carbon credits and help, predominantly provide for their sustainability efforts in their production through leaving that coal in the ground.
If I'd looked at this project 10 years ago, I would have said sulfate ilmenite, not worth anything, leave it where it is. But the project itself has got lots of benefits. So the project itself, it's a big ore body. So we've got a 280 million tonne inferred plus indicated resource. It's at 4.8% heavy mineral, which is a very good grade in today's world. The indicated portion of that is about 80 million tonnes at nearly 6%. So we've got a very nice ore body. It's sort of deep and easy to mine, obviously, because it's sand. It's got very little overburden on top, anywhere between 0 and half a metre. So there's almost nothing to do before you get to the ore. We're sitting on a major highway. We're sitting 350 kilometres from a deep water port in Western Australia. We're in Western Australia, another very strong positive in the world of mining. This project has a lot of attributes that are very positive that people don't really recognise because I guess they've seen that it's sulfate ilmenite and they recognise that it's at the lower end of the value. But all those other attributes, including that when we build our plant, it'll be very, very simple because it's only a sulfate ilmenite plant. It's very simple to separate this from the other grains of sand, which is all mineral sands mines really do. We don't process, we don't grind, we don't crush, we don't do any of those things. We just separate the grains of sand. So this will be a very simple plant, which means moderate capital and modest operating costs.